December 31st, 2022, the credit union sector in Grenada closed the year with $1.3 billion in assets, an increase from $1.1 billion or 10.8% compared to December 31st, 2021. Over the same period, total deposits stood at $1.09 billion and loans granted to members at $908.5 million, recording growth of 10.5% and 5.8% respectively. This has now shifted as GAFIN representative Montonia Monroe reveals that the first quarter of 2023 saw growth in assets by 4.4%.
At the close of the first quarter of 2023, growth in assets stood at 4.4%, bringing its total value to $1.36 billion as compared to December 2022. This data underpins the significance of credit unions to the national economy. Deposits in particular represented 83% of the sector's total asset position as of December 31st, 2022. This speaks of significant confidence of the over 84,000 member accounts held across the sector. Moreover, with the divestment taking place in the wider financial system, more opportunities are being presented for the sector to continue moving in this trajectory.
Monroe was speaking at the 39th Annual General Meeting of NEXA Credit Union. NEXA, who rebranded from the Grenada Union of Teachers Credit Union in January this year, hosted its AGM under the theme, Building a Future of Financial Stability by Optimizing Members' Experience on the Road to Success. Its financial growth as at December 31st stood at 17% over the previous year.
Turning to NEXA's credit union's financial performance, we note the following improvements as of December 31st, 2022. Assets grew by 17%, moving from $258 million to $309 million. Loans grew by 7.2%, moving from $199 million to $213 million. Deposits grew by 13.6%, moving from $204 million to $231.7 million. Institutional capital stood at 9.9% and share capital amounted to 5.2%. Surplus for the year of $7 million rounded is probably the credit union's best performance yet.
While continued growth is expected to continue, Monroe explains that non-compliance is still a serious issue within Grenada's credit union sector.
Notwithstanding this notable performance, as regulator, we note with concern the issue of delinquency across the sector. Total value of delinquent loans as of December 31st, 2022 amounted to $96.1 million, and the delinquency rate stood at 8.4% compared to 7.2% in December 2021, the benchmark being less than or equal to 5%. GAFIN notes the direct and lingering impact of the COVID-19 pandemic in this particular matter. However, the pandemic may not be the single cause of this issue. Credit unions must make it a priority to strengthen credit underwriting and delinquency management procedures so as to improve the current trend of delinquency.
Rena P. Thomas, GBN News.